Welcome to the course on knowing the Brunei Darussalam Accounting Standards for BDAS 7 Inventories. My name is Fatin from Dynamic Technologies and I will be your vocal guide for today. By the end of this course, you will be expected to understand and have a brief idea on what BDAS 7 Inventories is all about. Inventories under BDAS 7 are subdivided into three categories such as BDAS 7.1 Inventories, BDAS 7.2 Inventories Sold, and BDAS 7.3 Write-down of Inventories. Now let's go through the definition of each module along with a sample scenario to further understand the modules under BDAS 7. Inventories is defined as inventories should be measured at the lower of cost and net value. Inventories are usually written down to net value on an item-by-item basis. To record inventories, let us assume the following scenario. Power Cendana Berhad purchased power diagnostic machine from Germany and sell to the Brunei market. The total purchase price, including bringing the inventories to their present location and condition, including the cost of purchase and conversion, is $50,000. Accounting entries for this scenario can be derived as debit the inventories with $50,000 and credit the cash or bank with the same amount. This is a vendor bill transaction. A completed entry for this particular scenario will look like this in Accounting Plus. Do note the bill ID for your future reference. Next is BDAS 7.2, which is defined as when inventories are sold, the carrying amount of those inventories should be recognized as an expense in the period in which the related revenue is recognized. For example, to record inventories sold, Power Cendana Berhad sold 1 unit of power diagnostics machine for $2,000. Accounting entries are derived as debit the cash or bank for $2,000 and credit the revenue inventories for the same amount. This is a customer invoice transaction. This is a paid representation of the customer invoice for recording BDAS 7.1 inventory sold. Do note the invoice ID for future reference. Under BDAS 7.3 is the write-down of inventories where the market value of an item or items in aggregate is lower than its cost. The company has to reduce or write down the ending inventory balance. The scenario sample is as stated. The total cost of the diagnostics machine is $1,200 and their total market value is $1,150. So when applying the lower of cost or market rule to all inventory items, the market value of $1,150 needs to be used to adjust the ending inventory balance. If the market value of an item or items in aggregate is lower than its cost, the company has to reduce or write down the ending inventory balance. For example, in our illustration, the difference between the cost in aggregate and the total market value is $50. The accounting entries is derived as debit the write-down of inventories for $50 and credit the inventories with the same amount. This scenario is a journal entry transaction. A completed journal entry for write-down of inventories will look like this when you record this scenario in Accounting Plus. Do note the journal ID for future reference. If you need more help, guidance, or a demo on how to get started, we will be more than pleased to assist you. You may contact us with the following details as shown. Thank you for watching the course video for BDAS 7 Inventories.